very pleased to be able to speak today with Mr. M. Ramaswami, the President of Singapore Exchange, and the back of some very interesting recent developments in the exchange's attempts to become more regional. Mr. Ramaswami, thank you very much for having joined us this morning. Well, you're coming on the back of some very interesting developments in terms of Singapore Exchange's desire to become more regional in its attempt to be merged with the Australian Stock Exchange. Where are we now really in terms of the conversations, in terms of the perceptions of the Australian government in terms of how far they would want to support such an initiative?
Morning, Emmanuel. Thanks for having me here. I think this morning the Honourable Treasurer in Australia came out with a formal statement that he does not approve of this particular deal going forward. And along with that, he's kind of made a couple of other remarks, which is the rationale for kind of saying no to this and what they think would happen in the future in Australia. So having taken note of that, I think we will work towards, seeing how that develops and where Australia goes over time. But for us, it's life goes on as usual. I think that this was a transaction that we were hoping to do. We thought there was good potential and upside for both the exchanges. That's kind of why we pursued that. But not having that kind of immediately come to fruition is not by any means a disaster for us. It's something that we just live with and we'll move on.
But the Singapore Exchange over the past 5 to 8 to 10 years has been finding or looking for the fillip in order to see what the next big thing is in the exchanges world. And on a number of fronts, you are challenged, just as many exchanges around the world are challenged. You had for a time the prospects of the Chinese listings in Singapore, and then you did a lot of joint venture deals, especially with the Indian companies and Indian exchanges in terms of representing their products on your platform. And then more recently, you've had initiatives with Chi-X and to look on the electronic platform. It would appear that nothing seems to be working too well.
Okay. I think what I need to do is kind of step back and talk about the strategy for the Singapore Exchange, what it's been doing over the past, let's say, 5-7 years, as you point out, and where it's trying to go and where we think we'll be in a few years from now. If you take the exchange, there are 3 big activities. One is, the ability to raise capital for the industry and for, companies that want to raise capital. The second is the securities marketplace where the trading of these takes place. And then the third is the derivatives marketplace where, there's a lot of derivatives contracts that we trade. And in each of these contexts, we try to play the role of a gateway to Asia. And let me explain that in kind of each of the contexts. So in the first context, which is capital raising, what we look at as a gateway to India is we have companies from all around Asia who list on our exchange. Increasingly, companies don't look to list only on your home exchange in terms of raising capital. What's happening is there is a sectoral specialization that's coming across exchanges. If you look at SGX, we kind of have a number of REITs or real estate companies that are from China, India, and around the region that are listed on SGX. Similarly, there's a concentration of marine and port-related activities, where you have companies all the way from Norway through to most of the Asian locations, which kind of list on SGX. So the third area we would like to focus on is mining and minerals, where I think there's a lot of potential from companies in Australia, companies in Indonesia, which need to raise a large amount of capital for them to kind of be able to pursue what they need to pursue. And lastly, the infrastructural trust. We kind of look at India and Vietnam and places like that which require a lot of infrastructural investments. And again, we look at a listing venue for that. So in our context, what we look at is, given the fact that the Singapore marketplace itself is limited, what we are trying to do is become a regional hub for raising capital and be available for all these kind of 4 or 5 specialized industries to be a listing venue, right? So that's the first of our strategies. The second part of it, which is the trading venue. Now, as a trading venue, increasingly around the world, when you look at it, there's more and more evidence that people do want execution capability, which is institutionally driven. That's how the dark pools kind of emerged. And so what we do want to do is kind of not fight that trend, but play with that, which is kind of provide better execution capabilities such that the retail investor has the things they need, the institutional investors have the things they need. And again, in both of these, if you look at a marketplace, the key is about being fair, transparent, and orderly. And that's kind of what we ensure. So the marketplace we run is therefore amenable to both an institutional trader and a retail trader. And then the last piece, which is the derivatives piece, again, we play very strongly to what we call a gateway to Asia because we have derivatives contracts that provide an underlying marketplace which is very different. So we have a contract from India, which is a Nifty contract that we trade. We have the largest liquidity on the Nifty outside of India. It trades on CME and on us. So if you compare, we trade the Nikkei contract, we trade the Taiwanese contract. So over time, what we want to do is kind of be able to trade every contract that is in Asia to provide this ability to come to one place and be able to trade the derivatives of that marketplace. So in this context, a small trader sitting in, let's say, Chicago, who are all the futures traders on CME, by coming into one exchange in Asia can take a position or a view or participate in the underlying economics of all of the Asian marketplaces. So that's kind of the third aim. And now what we are looking at is the emergence of the commodities marketplace. And I think that over the last several years, depending on who you talk to, the production and the consumption of commodities is its largest in Asia, with China and India being huge consumers and Indonesia and Australia being big producers. But at the same time, when you look at the commodities marketplace, most price discoveries happens in London, happens in Texas, West Texas crude. So very little price discovery is happening in the places where commodity is produced and consumed, but price discovery happens elsewhere and these contracts are traded off those prices. So I think over time, in the next 5-7 years, Asia will develop its own price discovery mechanisms and we will be a key part of that. So in this backdrop, right, that's where you got to look at how we are trying to transact with anybody else. And as an exchange, we've been pioneering in many of the efforts. So if you take our association with CME, it started in, I think, 1984. And at that time, no one thought about working with exchanges cross-border. And even today, we have the only mutual offset agreement in place around the world between CME and SGX. And so a trader sitting in Asia can trade contracts that are fungible with those on the CME and kind of decide to clear it in another location. So it provides great risk control as well as clearing capabilities, but allows you access on a 24-hour basis to that contract, either in CME or here. So if you take all of these efforts and kind of look at how SGX has grown over time, it's grown pretty well. We have a cumulative growth rate of over 20%. Very few exchanges can kind of boast of that. And the second part is that's how we have a stock price that allows us to kind of even make a bid for a larger exchange like ASX, which is part of the problem, where people think it's a smaller exchange that's making a bid for a larger exchange. But I think it's all about our potential and how we are viewed by the investing public.
You have a lot of infrastructure put in place, and as you just pointed out, you've got a very comprehensive derivatives trading platform, but they're not necessarily used by the traders. The CME traders do not necessarily use Singapore as a one-stop shopping spot for the rest of Asia.
No, I wouldn't say that. I would say that the traders who are not very large institutions and who are futures traders in the US use SGX extensively. So if you look at the volume of Nikkei that is traded on SGX versus the home market, if you look at the contract in Taiwan traded, in each of those contracts, about 20 to 25% of the volume is on SGX and the 75% is in the home market. And by having that interplay between an overseas location and the home market, it also helps kind of ensure continuity regardless of what happens, an earthquake in Taiwan or a tsunami in Japan. In each of those kind of contexts, all of these dealers have always had access to an overseas location. Similarly, in the context of some of the issues in India. And we believe that a market share of about 25 to 30% is kind of appropriate for a second location. We don't think that we would be 100% of the contract. So for us, the key from where we are is, one, expanding participation so that we bring more liquidity into each of those contracts, and it helps the home market as well. And the second is to kind of expand our contracts such that we cover the rest of the market. So that's where we constantly are in dialogue with Korea, we're constantly in dialogue with the marketplaces whose contracts we don't have on our platform.